The cycles of fear and greed have continued.
When people say altcoin season is not coming back this time, what would you say to them?
They don't know what they're talking about. So Bitcoin, that has two things around its supercycle. Number one is the fact that you only have 5% of people in the world owning any Bitcoin. And it should, like other disruptive technologies that go mainstream, ultimately get to 70, 80, 90%, even if some of it's, invisible to the user. You don't go into the internet these days and say, okay, let me make sure I'm connecting to the TCP/IP layer, right? It's all invisible. And that will happen with Bitcoin and other cryptocurrencies. The 4-year cycles have been remarkably predictive of performance. So again, break each cycle down into 4 seasons. So every cycle has higher prices than the cycle before it. Satoshi talked about that in the white paper.
Well, that just sounds too easy. Is it really that easy?
So far it's been.
Do you think institutions get into Bitcoin changes the seasons?
I think this is considered to be the start of the third supercycle for commodities because of the dollar. I think the Satoshi planned it to be in U.S. presidential years, and so far it's been that way. But it was November of 2012, July of 2016, May of 2020, April of 2024. At some point, if it keeps on being less than 48 months, you're going to have it be in the year prior to the presidential election.
How would that change the cycle?
The last 40 years, from 2100 to 2140, will be a total of 2.5 Bitcoins for 40 years.
Wow. I was not thinking about that.
If you can go in and figure out how to get 1 Bitcoin over the next 10 years, that could be worth $20 million in 20 years, 30 years. 2029 will be the year after the next halving, and I think we'll be around $500,000. And then 2033 is, I think, we're going to get $1 million. I think it's a given now that we're going to be at $1 million.
Where are we in the Bitcoin supercycle? Where is this cycle headed, and where will it take the Bitcoin price next? We're talking about this and many other things with Michael Terpin, CEO and founder of Transform Ventures. I'm David Lin.
Bonnie Chang.
Michael, you've been referred to by legacy media as the Godfather of crypto. Why?
Well, I guess I've been around a while. CNBC called me that in 2018.
Yeah.
By then, I'd already worked on about 100 crypto projects in terms of advising and marketing. I founded BitAngels in early 2013, the first investor group. We're in 30 cities now, including Las Vegas, including New York, Dubai, Singapore. And it's pretty decentralized. It's basically each city holds their own events that connect founders with investors. And then we also do about 20 global events a year. So for example, we have a Denver chapter, but when ETH Denver's in town, we roll in some global resources because it's obviously going to be a bigger event.
What was your first crypto acquisition?
Bitcoin.
Mm-hmm. All right. Well, we're going to talk about the Bitcoin cycle.
The Bitcoin super cycle. You said Bitcoin price has 4 seasons.
Yes.
What season are we in now? And can you break it down for
Sure.
us?
We are in summer, which is the good season. So Satoshi in the white paper, and I talk about this in the book, Satoshi in the white paper said that as long as new Bitcoin usage, you have to buy it to use it, goes up more than the new Bitcoin that are being mined, the price has to go up. It never goes up in a straight line, and that's where the 4 seasons comes in. But every single cycle, we're in the 5th cycle out of 33 now, and each cycle has had fewer and fewer Bitcoins. So the very first cycle, Genesis block through the end of 2012, had 7,200 Bitcoin mined every day. And then after the first halving, it got cut in half. It went to 3,600. In the second halving, third cycle, it went to 1,800. 4 years later, it went to 900. 4 years after that, which is the cycle we're in now, 5th cycle after the 4th halving, we're now at 450 per day. Big change from 7,200 a day. And to put that in perspective, Michael Saylor buys more than 450 Bitcoin a day. So Michael and MicroStrategy alone take up all of the Bitcoin that are mined. And they're certainly not the only buyers. So as more and more, as they call them, Bitcoin treasury companies emulate, variations of MicroStrategy's model, as more states and governments and eventually countries, sovereign wealth funds start buying Bitcoin. Certainly in the last year, we've seen, institutions start buying it, and also the ETFs. And the ETFs, BlackRock alone has more Bitcoin now than MicroStrategy, and it took MicroStrategy almost 5 years to get what they have, and about a year for BlackRock.
Do you think institutions get into Bitcoin changes the seasons?
Does not change the season. It just simply changes the macro part, right? So the math behind scarcity remains the same. So we right now this is the first cycle that new Bitcoin, what they call the stock to flow ratio, is scarcer than gold. So gold has historically been about 1 to 1.5, sometimes as high as 2% of new gold coming onto the market. So that's their inflation. And it varies depending on the price of gold. If the gold is high, like it is now, I mean, all-time highs, 3,500 or so, that means they have more resources to go further down and, get some gold that wasn't viable when it was, say, $200 an ounce. Not so for Bitcoin. You can't go and put more money into miners and ever increase that amount of Bitcoin that comes out every day. In fact, it's going to continue to go down. So right now we're at 0.8 inflation, and gold is around 1.5. In 4 years, it'll go to 0.4, then 0.2. And literally the last 40 years, from 2100 to 2140, will be a total of 2.5 Bitcoins for 40 years.
Wow. I was not thinking about that.
Yeah.
I'm just thinking, you said strategy alone buys more than 450 Bitcoin a day.
Correct.
And all the big Bitcoin miners are mostly hodling, not liquidating.
That's correct, because they don't have to liquidate because they have they have other resources.
So is it fair to say then that none of the new Bitcoins being created on a daily basis are going to be available for the public? So in other words, in practice, the available supply is much less than 21 million. It's whatever it is now.
Well, right now we're about to hit 20 million in the next couple of months.
Right.
So that means that, we're about roughly 95% distributed in terms of like all the Bitcoin versus what's left. So there's only 5% left to mine. However, only 5% of the world has any Bitcoin. So at some point, all disruptive technologies tend to go through this technology adoption life cycle. They also call it the S-curve of adoption, where the first, 4, 5, 6% take forever to get going, right? That's when the early people, it was written about in Crossing the Chasm. It's been written about in the Gartner hype cycles. They're all variations on the same effect, which is that it takes 15, 20 years to get something to the point where it really has the momentum to appeal to the masses. And so you have the early adopters that might take 15, 20 years to get going. Then you have the early majority. And that's a larger category. It's usually, I think in, what Jeffrey Moore said, I think it's about 3-4% that are the early adapters. And then it's maybe like 10 or 15% of the early majority. Then you have the mid majority, which is where you get to like 50, 60% of the population. Then you have the late majority, the laggards. And then you have people who never, there's still people who don't own, a television, but that's a very small number of people.
Can you tell us what indicators are you looking at to tell you that we're going from this season to the next?
First one is the calendar.
The calendar.
So in other words, the 4-year cycles have been remarkably predictive of performance. So I, again, break each cycle down into 4 seasons. So every cycle has higher prices than the cycle before it. Satoshi talked about that in the white paper, that as long as you end up having, more Bitcoin being bought than Bitcoin being mined, it has to go up. It just doesn't go up in a straight line. And this is where human fear and greed come in. So after the halving, every single cycle, the price has been flat. And it's the shortest season. It's only 4 to 7 months. And the reason it's flat is because the miners go from making money to losing money in one day. And so if they're not selling Bitcoin, some of them still sell Bitcoin. And so what happens is that you think the price would drop if they're selling Bitcoin, but there are other people who are seeing where the cycles go, and they're like, okay, we just passed the halving. This is a good time to buy. And so they're buying it up, but they're not buying it up in a frenzy because they haven't seen, sort of the tipping point of like the new bull market. And so, for example, this cycle, we hit Bitcoin summer the day that it passed the all-time high of the prior cycle. That was 73,850. And what's interesting is most cycles, it hit the high for the whole 4 years at the end of the prior Bitcoin summer. So that would have been 2021. So we hit around 67,000 and change. And what happened this year was you had an anomaly because the pent-up demand for the ETFs, it got passed, and all of a sudden the month prior to the halving, you end up having a new all-time high. That was an anomaly. Number of pundits said, oh, that means the seasons are broken or the cycles are broken. Or they said, now we're going to have a short cycle because this is the new all-time high. And so it'll be over within a year. what they didn't realize, and I wrote about this in the book, is that you can't have this cycle's high before the halving. That's last cycle. The halving defines the break of the seasons, means the cycles rather. And so that what that did do was it marked a higher mark for what you have to overcome to be a new all-time high. So the 21 high of 67, we almost got there on the halving. It was like 60, it went down to the halving. And interestingly enough, the halving price has been the perfect price of Bitcoin. I call it the Goldilocks price. It's not too hot, not too cold. If you look in a rear view mirror, it is always like it either comes down or comes up to what the fair market price is when you evaluate it later on, is in terms of like, you can clearly see the peak of the bull market is oversold, and then or rather overbought, and that the bear market a year later is oversold.
What's
and it comes back
value?
to the middle. And so, right, the fair market value, and they can calculate that over time. And the halving date has always been the fair market value. So it was fair market value of $12 in 2012. It was fair market value of $670 in 2016. It was fair market value of $8,700 in the halving of 2020. And it was $63,900 this last cycle. So you can see, if that's the fair market value, every time it's gone up quite a bit. But between the cycles, you have wild fluctuations, although less every cycle. After the first halving, well, actually, before the first halving, you didn't have a halving, you had the Genesis block. But the difference between the first stated price of a Bitcoin sold, which was one sale, it was 5,050 Bitcoin that was sold on PayPal for $5. That was Satoshi's intern, Marty Malkoy. And that was the only sale for months. But that counts as the first price of Bitcoin, 1/10 of a penny. It went from 1/10 of a penny to $30 2 years later. And then it crashed to $1. And so that started kind of this fluctuation between, you literally went from the first stated price of a Bitcoin sale to the high of 3,000x, and then it crashed 97%. After the halving to high, first halving was 100x, and then the pullback was 85%. Second halving was 30x, with 670 to 19,800, and then pulled back 83%. And then third halving, it went up, should have gone up 10x, because 3,130, the kind of path there mathematically, it should have been about 10x. But we had bad macro. We had the Biden administration and Gary Gensler and Elizabeth Warren trying to kill everything, and driving people out of the U.S. and sort of getting skittish everywhere. And you ended up having a rapid rise in interest rates, which doesn't help for risk assets. And so instead of being 10x, we were 8x. I was on a panel around the time, and one of the panelists said, I think interest rates are more important than halving. And I'm thinking, if that was the case, then we'd still be at $8,700, right? And we're not. So it tamped it down to do 8x. I think most asset classes would be very happy with 8x, right, in a year. And so that's typically what happened the last time. And so with that model, I'm projecting that if we keep along the same dynamic, we'll be about 3x. So 3x from the halving puts us at 193,000. Now, that's with neutral macro. If the bad macro of the economy, tariffs are out of control, blah, 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 means that it outweighs the pro-crypto, regulatory that we have across all the forms of government right now in the U.S., that means the bad macro means we'd be under, maybe as low as 150, 160. If it was more strong, we could go up another 20%. So we could be like maybe 240. For much over 250, I'd say that we started the supercycle effect, where you're reversing the diminishing returns.
I guess what I wanted to ask is, how do you determine the fair market value each cycle?
Well, the fair market value is sort of a concept that I didn't invent. I mean, they track that for stocks and everything. You basically look at a chart and you see, what's overvalued historically, what's undervalued. And when it comes back to the median, that's your fair market value.
I did some math a long time ago. I don't have the chart here. I was trying to look for it on my phone. But if you take the Fibonacci sequence, 1, 3, 5, so on and so forth, you plot that on a logarithmic scale, it's a linear line that goes 45 degrees. And if you plot the Bitcoin price chart around that linear Fibonacci sequence, it oscillates almost perfectly.
Yep.
So this is the fair value if you want to take the Fibonacci sequence, and it goes like this almost perfectly.
Fibonacci has been somewhat predictive, but not perfectly.
Yeah.
I'd say that, again, the calendar has been pretty damn predictive because the highs of, there's 1,384 days in a 4-year cycle. We aren't exactly 48 months. It's been more like 46 months so far. But the high has always been within a 37-day period. That's like, 3% or something like that.
Yeah.
Of the 4 years. It's basically always been between, the earliest it's ever been is November 10th. The latest spin has been December 17th of the year after the halving.
Right.
Might move up a little earlier this time, maybe October. But within that period, that's when you start watching and saying, this is probably when the bubble's going to pop.
I've heard people talk about the 4-year cycle before, and the counter argument has always been, well, that just sounds too easy. Now, if everybody believes in the cycle, we just buy whenever there's a certain calendar, and then we sell whenever the certain the calendar tells us to sell. Is it really that easy?
So far, it's been. And the thing is that just because something is predictive and it keeps working doesn't mean everybody's going to follow it or believe in it. Sell in May and go away in the stock market has been very reliable for 75 years. And when I was mainly a stock market investor, I followed it. I sold my whole portfolio in May, didn't have to worry about it during the summer, and I would look to go and rebalance in November. That kept me all in cash during the 2008 crash. I didn't lose anything. And when November came around, the whole world was still on fire, and I said, I think I'll wait a few more months. And so I was able to get, my portfolio back at a much lower cost basis.
Could you talk about Supercycle? Because that term has been used a lot on Twitter.
Yes. So Supercycle has been used a number of times over the years. I kind of point out in the book the history of it. It was first called the Bitcoin and Litecoin Supercycle. And then Dan Held had talked about a supercycle happening because of COVID and reaching $800,000. Didn't quite happen. But to me, I looked at the supercycle of where the commodities supercycle has been in effect. And this has been, established that there's been at least 3 supercycles. So really you go all the way back to the Elliott waves and he actually talked about the grand supercycle, which lasted, sometimes like hundreds of years, right? And that's sort of similar to what Ralph Dalio talks about, empires, every 500 years or so. And so Elliott and Dalio and a number of other people sort of identified these big epochs. And then within that, you have lower cycles. There's 80-year cycles, but a super cycle is usually a period of more than 5 years. It can be a shorter period where there's a fundamental change in the narrative that drives, outsized profitability. And so in the 70s, gold quadrupled. And that was because of a fundamental change in the narrative. 2 things happened. Number 1, the U.S. went off the gold standard. And number 2, Americans were allowed to own gold again, and they'd been prohibited since the 1930s. And so the new buyers coming in, new demand, as well as a reason to not, kind of trust the full faith in the American dollar because it was no longer backed by gold, led to a very good strategy, and a number of hedge funds made their careers on that by quadrupling their money in less than a decade. In the 90s, you had another super cycle in the commodities market, which is based on China. So in other words, China started buying everything, and that upped the price of nickel, copper, you name it. And this is considered to be the start of a third super cycle for commodities because of the dollar, because of the dollar, kind of going the way of the yen and other places that just had too much debt.
Are you familiar with Neil Howe's fourth turning?
Yes.
So the theory is he's looked at this, and every 80 years there's a major crisis, and that's because of generational shifts. We are in that 80th year now.
That's correct.
Give or take. The fourth turning is happening.
Yep.
How would you evaluate that? How does that fit into your super cycle thesis?
Well, I think that's macro. So in other words, Satoshi wrote the paper in 2008. His reason for writing it was, sort of the reaction to the, the Great Recession, as they call it. And so, and then what you're seeing with AI now, which could potentially disrupt everybody's employment, redefine it, similar to like where maybe 80 years ago or 160 years ago, the coming of the industrial age, coming of the information age. I think there's been more disruption than just every 80 years, but the 80-year phenomena, which depending on how you count it, some people thought that was the change of the 1920s to, 2000. Other ones are like 1940s to now. So, I think there's a little bit of fuzziness in that model in terms of when it actually turns. But, I think that that's sort of that broader cycle within which so I'm just talking about Bitcoin that has two things around its super cycle. Number one is the fact that you only have 5% of people in the world owning any Bitcoin. And it should, like other disruptive technologies that go mainstream, ultimately get to 70, 80, 90%, even if some of it's, invisible to the user. I mean, you don't go online anymore, which internet's like 90-something% usage. If you include internet through cell phones, which is like over 100% usage, people have multiple cell phones. But you don't go into the internet these days and say, okay, let me make sure I'm connecting to the TCP/IP layer, right? It's all invisible. And that will happen with Bitcoin and other cryptocurrencies. I mean, I see within the next 2 years, certainly no more than 5, you'll be able to take out your iPhone and just like right now, you double click to pay for the stored credit card that's in there. Instead of taking it out and typing it in, you just go double click and it's in there. You will have your stable coins stored and accessible to your iPhone. And, you're not going to put like your life savings in there, but you might put $5,000, $10,000, $20,000, and Apple will have insurance, in case that gets hacked. But, Apple has been pretty good security just in their iMessages. And so they should be able to figure out a way to, not have like, massive hackings of, smaller amounts of crypto. And as people get familiar with paying, when the bill comes paying with crypto, they're going to find that, oh, you know what? This particular vendor says I can pay with credit card and I get the buyer protection, but I have to tack on 3.2%. More and more merchants are doing that. Stable coins, no charge. And, if you're spending $1,000 on something, you're saying, do I want to spend another $32 for the protection? Or do I want to just, double click with my stable coins? And then once you have a wallet with stable coins, I think you're going to find that people start looking at having a checking and a savings account. Their checking account is stable coins. Their savings account is Bitcoin.
Bitcoin has changed the world. But what if it could do more than just sit in your wallet? Welcome to Core DAO, the largest Bitcoin DeFi ecosystem.
Today's sponsor, Core, has over 1 million weekly users, $500 million in total value locked, and more than 100 live projects. Core is the most advanced platform for putting your Bitcoin to work.
Core allows you to earn passive yield with no principal risk. In partnership with Maple Finance, Core is proud to introduce LST-BTC, liquid staked Bitcoin.
For the first time, Bitcoin holders can earn sustainable passive yield without giving up custody or taking up excessive risk. LST-BTC transforms Bitcoin into a productive asset. By time locking your BTC using proven on-chain mechanics, you unlock new staking rewards while maintaining full transparency and control. Stake Bitcoin and Core together to earn even more, thanks to a dynamic dual staking system that rewards deeper participation. This is more than DeFi. It's the bridge between Wall Street and Web3. LST-BTC is designed to power the next generation of Bitcoin ETFs, structured financial products, and institutional-grade strategies.
Bitcoin finally working for you. Not financial advice. Visit coredao.org to learn more. Back to this cycle. We had a couple Bitcoin miners here yesterday, and I was asking them, so there is this narrative that they have absolute control over Bitcoin price. Like you were just talking about how if they don't sell right after halving, then there is no supply. But they were saying that the first two cycle that made sense because Bitcoin mined every day was a big number, but now it doesn't make sense.
Well, this is a smaller number, but that adds to the scarcity, right? So in other words, if you have more people buying and less inventory to sell, I think that, the numbers still make a difference, right? And so far, the cycles of fear and greed have continued. Now, again, that may not be for all 33 cycles. It probably won't be. I think after the super cycle, you may end up having a change. I think that as we tend to be creeping up in the date of the halving, because I think the Satoshi planned it to be in U.S. presidential years. And so far it's been that way, but it was November of 2012, July of 2016, May of 2020, April of 2024. at some point, if it keeps on being less than 48 months, you're going to have it be in the year prior to the presidential election. And so that will probably disrupt the fourth quarter because it would be, starting in a prior calendar year. And I think there's tax reasons and a lot of other reasons why, you end up having a peak in the end of a calendar year.
But how would that change the cycle?
Because if you have an earlier halving, you then have an earlier summer. And when it peaks would probably end up being earlier. It's one of many things that would sort of disrupt the way things have been. And we'll see. I mean, I think that we're going to probably still be having halvings in presidential elections for probably at least the next 3 cycles. Because again, the reason why we moved from like November to July was because in 2016, we had a lot of disruption in mining. That's when some of the Chinese miners shut down and moved to Texas and things like that. And so you had a lot more disruption than you do right now. Because if we're only moving it up, 1 month, I mean, it was like, let's see, it was like October, so it was like 4 or 5 months, and then it was like 2 months, then it's 1 month, and maybe this time it's less than a month. So we may end up having 2028. I think right now they're projecting either late March, early April, and so the 2032 maybe it's like still in March, and the one after that. So it may be another 3, 4, 5 cycles. 5 cycles is 20 years, and in 20 years we will be at over 99% of the Bitcoin already distributed. And we will have the scarcity, not just a little bit less than gold, but it's going to be like what? Less than 0.1% with a lot more usage. I mean, one of the analogies that I use is when you had the S-curve of adoption happen with cell phones, or you had it with the internet, a lot of companies got really big and rich because they served the demand of all these new customers, right? You had like Dell building laptops, you had Microsoft making software, you had Cisco making servers, and it was a bull market while you were doubling your market share, right? Go from 5% to 10% to 20% of people on the internet, and not a lot of competition. You can't do that with Bitcoin miners. They can't mine any more than 450 a day. And they may be able to take a higher amount of market share, but again, that's only 450 a day. Then it's gonna be 225 a day. Then it's gonna be 110 a day. Then it's gonna be 55 a day. At some point, even in the next 20 years, you're gonna be well under 100 a day. And yet the demand, might be 4, 5, 6 times what it is today. And you can't go and just simply say, oh, we're gonna build a company to make more Bitcoin. No more Bitcoin is found underground. No more Bitcoin is being found on Mars. It's, the monetary policy is in code for the next, 100 and something years, 125 years, or 115 years, 2140.
When people say altcoin season is not coming back this time, what would you say to them?
They don't know what they're talking about. So Bitcoin maxis have for a long time said, yes, all altcoins are frauds, and now the gig is up, they're all going to zero. Ethereum's going to zero, Solana's going to zero, it's all going to zero. That's just not in reality. In fact, it's surprising that Bitcoin is still at like 64, 65% dominance, with the fact that the other 35% includes stable coins. So stable coins are a much higher percentage of the altcoins now, and they're going to continue to grow. But even meme coins, which everybody says is going to go to zero, are still pretty popular. And so altcoin season, quite interesting. Every cycle you've had new entrants actually oftentimes not get in Bitcoin first, they get into altcoins first, right? In 2021, Robinhood, a public company, had, in its quarterly earnings report that they had a big jump in their earnings from crypto. 60% of the crypto traded was Dogecoin. It was more than Ethereum and Bitcoin and Solana combined. Actually, Solana wasn't anything back then. And so we may see a repeat of that where, so far early on, a lot of new entrants are in meme coins, are in, other small things, because a lot of new retail looks at Bitcoin and say, I can't afford $100,000, but I can afford 1 million of, these Shiba Inu coins. And, they're just going to hope that they go up 100x and, Shiba Inu, is it going to go to $1? Well, if it went to $1, it'd be bigger than Bitcoin, right? And I've worked with the Shiba Inu team. And so I think if people understand that, like, particularly if they're younger, you're 18, 20 years old, you're probably going to live another 60 years, maybe 80 years, 100 years if life extension keeps going up. What's Bitcoin going to be worth then, right? So if you can go in and figure out how to get one Bitcoin over the next 10 years, that could be worth $20 million in 20 years, 30 years, certainly by the time you're retired. And that will definitely outpace inflation by a lot. Whereas these other things have great risks.
So when you say altcoin season, and we're in summer, so I would assume that altcoin season is going to happen soon because we're in summer.
Correct. And usually altcoin season peaks a little bit after Bitcoin peaks. So in other words, in the big ICO bull market and this last time, Bitcoin peaked in December of 2017. I think Ethereum peaked in like January or February. Other alts peaked in January. And so usually there's a little bit of a lag and again, I think institutions may change this a little bit because they don't really trade alts, at least the smaller ones. So it's more of a retail phenomenon. But, a lot of the whales too, and the whales still control more than the institutions, right? A lot of the whales will just simply look and say, if they're not perma holders that never trade, they'll look and say, I've got a great life. I'm like, I've got like $100 million of Bitcoin and I don't want to really sell any, but like, I'll take a little off the top at the end of the cycle and then buy it back at the bottom, which is what I advocate. But a lot of times what they'll do is they'll go in, sell Bitcoin and then pump an altcoin with that and then sell that. And then, maybe pump a meme coin at the end of the thing and then just sit back, hold the cash for a year and then wait for capitulation. They buy back in.
See, I've heard this theory so many times, but in reality, it's so hard to execute.
Not really. I mean, I show how to do that in the book.
Okay.
I mean, obviously it's better if you have, an army of algorithmic traders working with you. And I do have a fund called the Bitcoin Supercycle Genesis Fund that's, going to be coming to market in a couple of weeks.
Wow.
And it's for accredited investors, but basically I've got a team of, algo programmers that I've worked with. And so they'll go and do algorithmic programming within the whole 4 years. And there's other companies that do this, but most liquid funds, hedge funds, after fees, do not outperform Bitcoin sitting in your wallet, right? Because they take their fees in cash, they take their percentage in cash. And if Bitcoin just normally goes up, you're paying 20% of what would normally go up. Maybe they're beating it, but are they beating it by more than 20% every year, right? And so we're looking at beating it by doing something almost nobody does, which is selling almost everything at the top and then buying it back at the bottom. Wow. And so historically...
how would you know if you're at the top?
Again, you look at the calendar.
Yeah.
You look at a number of other things I discuss in the book, which is like you look on chain.
Yeah.
You can see when the whales are selling. You look at sentiment. There's like about 20 different factors, but you're never going to pick the exact day, although I have known really good traders who did pick the exact day and sold everything on December 17th of 2017. I know 2 traders that did that, and other ones that sold, in early November and pick the day or within a couple days. But I recommend dollar cost averaging out once it gets into that range where you're like over 90% fear and greed on the greed side, when you can see whales have started to sell. And so if you dollar cost averaged out over the last 4 halvings, I mean, if you went and at the very first halving, you spend $12,700, right? This is a small investment for most investors, beer money. And you just bought it and held it forever. You have 1,000 Bitcoin. Today, that $12,000 investment is worth $107 million. Pretty good investment, right? However, if you went and held Bitcoin for 3 years and held cash for 1, so you went and dollar cost averaged at the top. So the first cycle, you wouldn't have been able to divine the high price over $1,200, but you would have gotten out around 1,000, right? So all of a sudden, you've had your $12 Bitcoin, you sold it for 1,000. And then you hold the cash, it dropped all the way down to 171. You probably weren't going to buy it that day, but you had several months afterwards, you could have gotten back in for around 250. So now all of a sudden, you have 4,000 Bitcoin. You hold that for 3 years. It went up to 19,830. you probably weren't going to sell on that exact day, although there was reasons to do that because that was the day they announced the futures. It was sell the news. But you could have pretty easily gotten out around 16,000 and then held that cash. It dropped down for a year. It dropped down to 3,200. Not saying you would have picked the bottom. You had several months you could have gotten in around 4,000. Now you have 16,000 Bitcoin. So basically, you would have been able to go 4x, 4x, 4x. This last time, a little less than 4x, but you have about 60,000 Bitcoin. So now your $12,000 investment isn't worth 107 million. It's worth about 5 billion. And so by the end of this cycle, it'll be worth over 10 billion, which is an extraordinary return.
Can you tell us about just a little bit more about the objective of your fund, the Bitcoin fund that's coming out? If one were to believe that Bitcoin is going to keep going up because of these cycles, why not just buy and hold? Are you trying to outperform Bitcoin?
Yes.
Okay. So that's the Bitcoin. Bitcoin is basically the new market benchmark. It's like the S&P.
Yep.
And you're going to do that by timing cycles, or are you going to do that by buying alts that will outperform Bitcoin as well?
No alts.
Okay.
Alts are too risky.
Right.
Bitcoin is the least risky crypto investment. It has an almost 0% chance of going to zero at this point. Whereas every alt can go to zero, including Ethereum.
If you look at Bitcoin price and it goes to the range, like your prediction, what could tell you we still have a big way to go? Or do you just sell then?
Well, again, dollar cost averaging. And so I'm always keeping a little bit of a moon bag, so I probably won't sell 100% because you never know if this time the cycle might be a little longer. Last time I probably kept more than I should have because there was a big piece of the narrative that said that a number of pundits and YouTubers were saying we're going to have an elongated cycle. It's not going to be a fourth quarter. It's going to be May, and it wasn't. It was fourth quarter again. So
it's just follow the calendar.
Follow the calendar, but look at the metrics. You look on chain, and you look at there's, again, 5 or 6 things that I follow to sort of decide whether it's actually repeating what it's supposed to do.
Well, Michael, tell us about your 2033 prediction. I believe you told the street you had a big rally coming up for us for Bitcoin by 2033. What's your prediction for the next 8 years out?
Sure. So 2029 will be the year after the next halving, and I think we'll be around 500,000.
Yeah.
And then 2033 is, I think, when we hit 1 million.
Okay.
Now, if we have a super cycle, we could hit it before that. But I think you'd have to hit it in the years after you're not going to hit it during, a down year.
What point does Bitcoin overtake gold in market cap, which is $14 trillion?
But that's a moving target, right? So actually, gold, I think, is actually quite a bit higher than 14 trillion now.
Oh, yes, it is. Yeah, that was last year.
Yeah.
So
I think it's almost 20 trillion now.
It is.
So $1 million is 20 trillion, right? So if gold stays around 3,500, you need to go to 1 million. If, say, in 8 years, gold is 6,000, 7,000, certainly could double by then. Then you'd have to be 2 million.
Is there a macro case for Bitcoin to replace gold as a de facto treasury asset, not just for companies, but for central banks?
Yes. So if you look at, they talked years ago about Ethereum replacing Bitcoin because they never got too close, but they were heading in that direction, right? So during the ICO craze of 2017, most of it was built on Ethereum. So people were needing to buy a lot of Ethereum. And Bitcoin went down to its low point ever in terms of dominance. It was like around 35%. And Ethereum was up, I think, around 20-something percent. So they were calling it the flippening, when Ethereum market cap would flip Bitcoin. And then after that, everybody would think of Ethereum as the major asset. Bitcoin would go down, Ethereum would go up. Never came close to happening. I think you could say the same thing would be true of gold, right? So in other words, if by definition, gold is worth more globally, Bitcoin is worth more globally than gold, and it's heading in the direction of increasing its lead, I think that you would look and say, this is, I think it was, Paul Tudor Jones that said, Bitcoin's the fastest horse in the race. And he's the guy that really was the hedge fund that made the most on gold in the 70s. He's like, this is the new gold. And so he's not buying a lot of gold, he's buying a lot of Bitcoin. And so I think that if you also look just generationally, ask your average 25-year-old if you needed to go and put half your savings, life savings in gold or Bitcoin, which would you do?
Bitcoin.
Exactly. And so those are the people that are 25 now. At some point, they're going to be the top earners at 45.
Do you think it's always a good time to buy Bitcoin?
No, I think it's not a good time to buy Bitcoin when the bubble popped, because then you're going to go and just watch it go down, 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 down. That's a good time to short Bitcoin.
Can I just hold it? Because I know it's going to come back.
You absolutely. In fact, if you hold it, the good news is that it'll probably be higher 4 years later. But if you didn't buy it and you waited until the bottom of the market, it's only a year, you would have been able to buy 2, 3, 4 times as much.
Do you generally agree with this general statement? And last question for me: churn rate of investors or traders, the lower it is, the better you are.
Could you repeat that one?
The churn rate of your trades, lower it is. In other words, the lower the frequency of trading, generally speaking, the better off you'll be.
Generally speaking, yes. On the other hand, if you've got good algos that outperform the fees, then, my fund is going to trade as much as the algo it says to. It's not going to be doing 30 trades a day. It might go a couple of days without a trade. But if it says things are heading south, it's going to sell. It's not going to sell the whole portfolio.
But for the average investor who is
investor, the safest thing, if you just don't want to have a job, you just want to basically just have something that you think is going to set it and forget it. Buy Bitcoin, never look at it. And, a lot of people do that, and they're going to hand it over to the grandkids. On the other hand, if you want to work about a couple of weeks every 4 years, it's not that big of a job, right? I mean, they say, if you're a stock market investor, I think Jim Cramer said you need to spend 1 hour per week on each stock you own, right? That's a lot. But with Bitcoin, literally you only have to pay attention about twice every 4 years.
A lot of young people watch our show. Some encouragement, maybe they don't own Bitcoin yet, but anything you want to say to them?
Sure, it's not too late. I mean, I think it's a given now that we're going to be at $1 million. That means we're only 10 cents on the dollar where we're going to be in about 8 years. And I show in the book how you could go in and start with just one Bitcoin and be close to 100 Bitcoin in like 20 years. And so if you're a young person, you got multiple 20-year periods ahead of you.
Read the book, everybody. Read the book.
This book up.
Sure, absolutely.
Where can we find this book?
So Bitcoin Supercycle. It's distributed by Simon & Schuster. Easiest way to find it is on Amazon.
All right, okay. Read this book and follow Michael Terpin. So that's the...
I'm at Michael Terpin, Terpin on Twitter.
That is the takeaway from this interview. Thank you so much for coming to the show.
Thank
Pleasure.
you. Absolutely.
Thank you.
Thank you.